What's up, you guys? Zoeb here from OneGlanceTrader.com, and in this video I'm really excited to be going through part 5 of my candlestick patterns trading crash course. If you're brand new to this series or want to watch the full series from the beginning, you can click the link in the description which has the playlist to the full trading crash course. So just to give you guys an overview of where we are to date, this course utilizes my OGT Price Action indicator, which is absolutely free, and it comes with 5 powerful candlestick patterns which this course is based on. Part 1 goes into all the global settings, how to set up alerts, and whether you want to trend trade or counter trend trade, and then parts 2 to 6 go into those 5 different candlestick patterns. And we've gone through the pin bar, which is the rejection candle, the engulfing bar, which is the reversal dual candlestick pattern, the inside bar, which is a breakout candlestick pattern, again a two bar candlestick pattern, and then we've got the doji, which is a one candlestick pattern, and it's classified as the indecision candle because when this type of candle forms, there is indecision in the market. So what does a doji look like? A doji candlesticks is where the open and close are really close together and creating a very small body, and it looks like a thin line. So if you look at the 4 images, there are 4 types of dojis that are there, and as you can see, it doesn't matter if there's a wick formed. All it's looking at is where the open and the close, so the body of the candle, is really thin and really small, aka really close together. And again, as I said earlier, a doji suggests that there's indecision because of the small body. Neither the bulls or the bears took the throne really in that price action kind of activity. So how do we set this up in the OGT price action indicator? Again, because it's an indecision candle, which could be used as trend continuation or trend reversal, we want to take the MA filter off, which will then give us all the signals, all doji signals. And there's one criteria that you can change inside the doji settings is how far do you want the open and close sorry, distance to be from one another. And again, you can choose from 0%, so therefore the open and the close are exactly the same, or you can go all the way to 5% difference in price between the open and close. My suggestion is to have it at 5% because the lower down you go to 0%, the less signals you're going to get, because there aren't many bars where the open and close are exactly the same or really close together. So giving yourself a big enough range so you can see all the signals gives you more opportunities to trade, as well as bringing in other confluence factors, which we'll go through in a couple of examples inside the next slide. Again, completely customizable. This is how I like to personally trade and use the doji settings in my trading. So I've got I've got 2 examples here of the doji and how we can use it in trend continuation, which is the blue box, and how we can use it as a reversal, which is the orange box. And the good thing is this all occurs within the same chart, within the same kind of relatively small period of price action. So if we look at the blue chart at the moment here, what we've got is we've got this doji that's formed over here, and as you can see that the open and close sorry, are relatively close together, and it appears after this downward momentum, and we've got price hitting the bottom Bollinger Band, and then price has now started to get some cause of indecision. Now what we've also got here is we've also got an inside bar, as we learned inside the previous part. Is you see this candle here, the candle that forms after is the whole range of the candle is engulfed by the preceding bar, and that is an inside candle. And as I also mentioned inside the previous part, is that the more inside bars that you have, the stronger the probability of a break to one side. So the next bar again was also an inside bar because it's still within this this range of this candle, but this is where the doji comes in. And then you can see you've got some more inside bars. Even this one here didn't really break through, and then eventually we break through at this bar. So we've had 8 candles that were engulfed by this mother preceding bar over here, and then eventually we get a breakthrough. But this doji gave us that confirmation that there was indecision, and if we had the inside bar and the doji settings on, we then could have utilized both these candlestick patterns to tell us that story. So when we saw this doji and we've got this two inside bars, by the time the doji formed, we can create a line below this low and get triggered into the trade when that happens. And as you can see, price then continues to go down. And then when you look at the orange box, so price then continued to go down, and then it hits again the bottom Bollinger Band, and then we get three dojis in a row. And the more dojis you get in a row, the more powerful the indecision is, the more powerful that you'll either get a move from the downside or to the upside, because again, you've now got 3 1-hour candles on the AUD USD of big indecision with long wicks as well, again giving us that confirmation that, you know, neither the bulls or the bears were really trying to take hold of this market. So when we get this situation over here, we're then looking for another particular price action to kind of come in. So we've got what we have over here is that we've got this engulfing bar that comes in. If I just move my mouse out the way so this slide pointer thing moves out the way, is that you can see there that this green bar here completely engulfs the preceding bar. And again, this was taught in part 3 of the course around the engulfing bar. If you haven't checked that one out, I strongly suggest that you check out the playlist below, and that would have given us the confirmation of then to then go long inside this trade. And yes, it did go up depending on your reward to risk, got a bit of, went back into it and then continued to go up there as part of the trend. So you can see here how we're using confluence factors, additional price action, as well as Bollinger Bands as well, to kind of really form a kind of picture of what the market is kind of telling us. And this is how you use dojis. You don't just trade off a doji, you do need additional confirmation factors to ensure that you are trading sorry, with the trend, or looking for counter trend opportunities. So I really hope that kind of makes sense. Again, when I first created the doji, I didn't really use it a lot, but now I have it on my charts all the time, because again, it just gives me that. And these 3 things here, this is a perfect trade here. When you start seeing this, you know something is going to happen. And then when you mix it up with inside bars and engulfing bars, all that kind of good stuff, you know, you can get some really powerful trades. So hopefully now you guys will now get to the thumbnail for sorry, part 6. Part 6 is the last candlestick pattern in this series, the Marubozu. Again, a really strong candlestick pattern. So click that link or click the playlist below if you want to go back and watch the previous parts in this series. So really hope you found the doji useful, and I shall see you in part 6. Look at the Marubozu.